Hello everyone, and welcome back. This is part 3 of the 9 a.m. CR model. Let's dive right into this. I do not want to make this a long video. I want to make this straight and direct. So, as we know, we've learned Turtle Soup within the 3 candle or the inside bar plus CRT. So we already know how this example functions. First candle creates the range, second candle soups the high, third candle distributes expanding lower. However, the second option, the second way price is able to move, is expanding. We are no longer souping the range high, we are expanding and closing above it. So as I just mentioned, the market is always expanding or ranging, consolidating. The question is, how do we take advantage of the actual expansions if we are Turtle Soup traders? Everybody has been asking in the comments, how do we trade the breakout? I'm gonna reveal everything in this video. I just want to make something clear from the start. Trading a breakout of a CRT range is less high probability than the 3 candle CRT, right? If you only trade Turtle Soups, you will have a much better success rate than if you try to implement breakouts or expansions. There is 2 ways a candle moves: up and down, creating highs and lows with every new candle that forms. That is very important. That is why every single candle creates a range. This means price can only 1. Turtle Soup, or 2. Break a high or a low. So price can only either Turtle Soup a high or low, or break a high or low. What does that mean? Use this sentence and apply it with this right here. What you would understand is every single candle is either souped or broken. The breakout of the range. We know that a wick above a candle high is bearish, and a wick below a candle low is bullish. That is the Turtle Soup. We also know that a close above a high is bullish and a close below a low is bearish. This is basically how we will gauge if there will be a breakout or not. The close above or below a high or low is the breakout. At this point, you are no longer looking for CRT highs and lows to be turtle souped. Instead, you are looking for them to be broken. For example, close above, bullish, close above, bullish, close above, bullish, close above, bullish. If we would have instead wicked, bearish. Instead we closed, so we are bullish. We enter below the open of this candle at a specific area. I want to make something clear. We already know this because I've taught it in the previous videos, and so has Romeo. In a bearish trending market, price will reject the highs and break through the lows. It's the opposite for a bullish trend. So in a bullish market, price will reject lows and break through highs. That is very important. I've taught it before. Why is that important? Because when we're bearish, breaking through the lows is the expansion, and when we're bullish, breaking through the highs is the expansion. So if you know accumulation, manipulation, distribution, the power of 3, and you apply this concept, you will succeed. So the breakout versus the Turtle Soup. I touched base on this earlier in the video. As we know, a breakout is a close above or a close below. So a close above a candle's high is bullish, and a close below a candle's low is bearish. Now, a wick below a low is bullish. This is a turtle soup. And a wick above a candle's high is bearish. That is the turtle soup. I made an error. This should be higher prices, and it should say lower prices right here. Just if you're marking everything down, which you should be taking notes. Correct this in your notes. Pay attention. So everybody has been asking me if bias is important. And others are asking how to actually get their bias. I'll explain everything now. First off, bias is very important to your trades. This is why we look at higher time frame CRTs and lower time frame CRTs within the higher time frame. And this is also why we use higher time frame key levels. Bias is very important. You should also be using the IPTA range to measure if we're bearish or bullish. So number one, when wondering if the session will be bearish or bullish, first you need to ask yourself, are we ranging or expanding? Like I mentioned before, the market can only move in these two directions, either sideways, ranging, consolidation, or expansion upwards or downwards. Number two, this is step 2 in using the bias. Use the if-then principle. This is taught by Romeo. Here is the core foundation behind the principle. If, when the higher time frame is bullish, then the lower time frame will smash through the highs and get electrocuted by the lows. What does this mean? This means that if the higher time frame is bullish, the lower time frame will break through highs and basically reject lows and break through highs. In simpler form, it's the opposite when we're bearish. So if the higher time frame is bearish, then the lower time frame will sink like a rock in the sea, and the highs will electrocute price into a bearish downfall. Lows will crumble. Simpler form, this basically means in a bearish market, price will reject highs and break through lows. Do not blindly trade turtle soup. That is pattern trading. We are not pattern traders. We use the bias and then apply the models. We don't just trade off of any single CRT that we see. High time frame order flow is the most important thing, and then turtle soup. So first the high time frame order flow, and then turtle soup, not the other way around. Let's take a look at this example. This is a daily time frame. Now, on this day we created the range. The next day we broke the range. How did we break the range? We closed above it. This means you are likely to get an entry below the next candle's open. As we see right here, buy below the open of this candle. Simple, do not overcomplicate. So, right here, if the daily candle closes above yesterday's high, which we did, then it is likely that you will be able to buy below the open of tomorrow's candle. A close above a high is bullish. Vice versa when bearish. So what does that mean? That means if we were to close below the low, we would need to enter a sell position above the next candle's open. So, something very important to understand. You do not just buy at any random location when you're bullish. So what do I mean? You do not just buy below the open of this candle at any random location. You will get yourself burned if you do that. When bullish, we need to wait for the turtle soup to appear below the candle's open at a specific point. Why? because we are looking for high probability setups. Simple. It's the opposite when bearish. So when we are bearish, we wait for the turtle soup to appear above the candles open. You will often see the turtle soup form at a very specific level, and that is where you want to enter. So firstly, you need to wait for the turtle soup to appear below the open of this candle, and then you can enter long. So this is a slide taken right out of the CRT lesson for those of you who watched that. This will be a bit of a repetition. I'll go through it quick, not too in depth. If you haven't watched the CRT lesson, I highly recommend it. I've been getting nothing but love from it, so I'm guessing everybody loves it. I basically revealed everything to you. All the secrets have been revealed. Let me just talk about the power of 3, as this is a very important concept. So the power of 3 represents 3 stages of price delivery. If there is 3 stages, then all you need is 3 candles. As we know, we have a 3 candle CRT. Range forms with the first candle, accumulation. Second candle, manipulation, turtle soup. Third candle, distribution, expansion. Use the power of 3 to your advantage by combining it with the previous knowledge of candles or ranges. This has also been taught in the previous videos. Power of 3 occurs in every single candle. This means time is fractal, and there is going to be a range in every candle. That is crucial to understand. Why is that important? Because if we take a look at this example, you can clearly see the power of 3 within this candle. This is a daily candle. On the lower time frame, it will be easier to see. Open, accumulation, manipulation lower, distribution higher. Power of 3 in a breakout candle. So, as we know, the power of 3 is within every single breakout. You need to spot that power of 3, spot the manipulation turtle soup. If you're bullish, that's going to be below the open. And if you're bearish, it will be above the open. So when bullish, at the open of a candle, price will consolidate on the lower time frame, then dip into the previous candle's range. Very important. And then expand higher. 1, consolidation. 2, dip into previous candle's range. And 3, expansion higher. That is the sequence. Consolidation would be the accumulation stage. Dip into previous candle's range is the manipulation. That is where you find your turtle soup. And 3 is the expansion higher, distribution. Vice versa in a bearish trend. So when you're bullish, your goal is to find your entry model below the open of the candle that formed after the one that broke the high. What does this mean? So this candle broke the high. We now need to enter below the third candle. So the candle after the one that broke the high. We need to find our entry model below it's opened. Vice versa when bearish, your goal is to find your entry model above the open of the candle that formed after the one that broke the low. Broke a low, bearish, enter above this candle's high. So you enter above the candle that formed after the one that broke the low. So this is the higher time frame. This is the lower time frame. As we can see, price opens. Candle 1 is this gray shaded region. Candle 2 is the red shaded region. Candle 3 is the blue shaded region. As you can see, price opened, turtle souped, manipulation into the previous candle's range, expansion higher. Same thing on this example. So for a bearish sequence, break the low, candle open, turtle soup, entry short, expansion lower. So as you can see right here, price opened on the third candle, consolidated a bit, manipulated higher to a specific point. Specific point of what? A specific point of the previous candle's range. Turtle soup, where? At a specific region, once again. Short, distribution lower. Maybe some of you guys have caught on, but this breakout scenario is much higher probability than this one. Why is that? Because this candle turtle souped at the midpoint of the previous candle's range. Keep that in mind, little cookie. Have you ever wondered how to profit if you missed the CRT Turtle Soup entry? As we saw in the previous example, you can use the concepts to anticipate price action after a CRT has been respected. Simply look for your entry above or below a candle. Only after the if-then principle rule is applied. Of course, this is always going to be lower probability than Turtle Soup CRT. As I've stated before at the very beginning of this video, a breakout is less high probability than a CRT Turtle Soup. So what does this mean? As we saw in the previous example, price turtle souped the CRT high. We expanded lower, breaking through the low of the range, retraced to the midpoint of this range. Turtle soup at the midpoint, short, and it's also above the open. Short, expansion lower. That is exactly what this means. Pause the video, take your notes, rewind, and focus. At the start, your breakout trades will be lower probability comparing to the normal CRT turtle soup reversals. This is important to understand. Why is it important? Because if you do not want to trade the breakouts, you do not need to. However, the more you do practice, the better you will get, the more you will see. Trading breakouts is not necessary to make money trading, and I would recommend you not execute these setups as they are more complex and not beginner friendly. That being said, you do what you want. Discipline, folks. If the range is broken to the upside, we will anticipate higher prices. We want to find our entry model below the open of the next candle. However, there is a more specific location where the entries become even more high probability. As I've mentioned before, this is at the EQ or midpoint of the range. The goal is to enter at the EQ of the candle that broke the high. Ultimately, this is below the candle's open. The examples will follow these slides. So you need to understand something before we move on. This setup, this model, does not always happen. It does not always play out. However, when the setup does not appear, you simply do not enter. Filter out trades. Only trade a breakout if there is a turtle soup at the midpoint of the candle that broke the high. Of course, make sure your higher time frame order flow is aligned. How do we do this? Using the if-then principle taught by Romeo. So this is the 9 a.m. CR model while price is breaking out. Example number 1. We are using the 1 hour time frame as usual, drawing out the 8 a.m. candle high and low. Next, we hop onto the 15-minute time frame. As you can see, we draw out the high and low of the 9 a.m. candle. The 9 a.m. candle closes at 9:15. So this right here is the 1-minute time frame. As you can see, we formed the 15-minute CRT. Pay attention to the key level above. Right now, a lot of you guys would be bearish, but you would want to be waiting for confirmation. As a beginner, you must not execute this entry right here to go short. Why? Because it is within the second candle. You must wait for the third candle to, the second candle to close and the third candle to open. Hopping back onto the 15-minute chart, you can clearly see the first candle formed a high and a low. This is 9 a.m. The second candle that forms after 9 a.m. broke through the high. We closed above the high. Now we know price is bullish, heading towards the key level. The key level right here. Where is the entry? Below the open of the next candle. So something important to understand is that we did not only close above the 15-minute high, we closed above the 1-hour high as well. Bullish. Close above equals higher prices. Hopping back down to the 1-minute time frame, we can clearly see the first 15-minute candle represented by this gray shaded region, and the second candle, 15-minute candle, represented by the blue shaded region. The next step would be to draw out the high and the low of the candle that broke the high. Once the high and the low are drawn out, take out your fib. Extend the fib from the high and the low and mark the midpoint, the EQ of the range. Your goal is to find an entry at the midpoint of this range. Why this range? As I mentioned before, you need to measure the midpoint of the candle that broke through the high or broke through a low. If you guys are confused, this gray shaded region right here is the 1-hour candle, so the 8 a.m. candle, and the red shaded region, the bigger area, is the 1-hour candle of 9 a.m. This is 9 a.m., 9:15, 9:30, 9:45, and so on and so on. So the third candle opens. We drop below the candles open into the midpoint region, turtle soup into a fair value gap, entry, long, targeting where, the key level, and for those of you paying attention and studying properly, the first standard deviation. So let's recap the trade. 8 a.m. 1-hour candle forms the range high and low. 9 a.m. 15-minute candle forms the range high and low. The second candle breaks the 9 a.m. candle's high and low. Our goal is to find an entry below the third candle's open, where at the midpoint of the previous candle, the specific candle that broke the high or the low. In this case, the high was broken. Midpoint turtle soup, fair value gap, entry long, targeting key level, and then the first standard deviation. Simpler format: candle number 1, candle number 2, candle number 3. Let's hop back on the 15-minute time frame. As we can see, the first candle formed the range, the second candle broke the range high of the 15-minute CRT and the 1-hour CRT. The third candle opens, tapping into the midpoint of the previous candle's range. Manipulation, distribution higher. Let's get some more theory involved. How to actually execute these breakouts. Remember, the power of 3 is in every single candle, as I have stated before. Key rule, write this down. Bearish, you need to sell above the open. Bullish, you need to buy below the open. If you are bearish, wait for a candle to close below a specific low. If bullish, wait for a candle to close above a specific high. Then, and only then, look for your entry. Once the candle closes, you draw the high and low. Next, you take out the Fibonacci and measure the range, a very specific range. As I have mentioned before, the range you are measuring is the candle that broke the high or broke the low. Your entry would be at the midpoint, CE, EQ, 50%, 0.5, whatever you want to call it, the midpoint of the candle's range. That is where your entry will be. You will find a turtle soup. If you do not trade turtle soups, you'll find an institutional order flow entry drill, a breaker, an order block, FVGs. You'll find everything. This is the highest probability breakout execution model that you will ever see and that you can ever use. Waiting for price to reach the midpoint of the previous candle's range, the range that broke the high or low, is the best execution model there is to trade breakouts. However, understand this. This does not mean that you will never lose. You have to also remember that CRT breakouts are less probable than CRT reversals. A CRT reversal is the turtle soup that we have learned prior. However, the breakouts do occur. So here's a little tip for everyone staying till the end. If the EQ is never hit or tapped, do not enter a trade. Remember, the less time you are in the market, the better you will perform. Filter out the bad setups and only execute on the valid ones. Do not force anything. Focus. So let's take a look at an example. Hopping onto the 1 hour time frame, you want to draw the high and the low of the 8 a.m. candle. Next, on a 15-minute time frame, you want to draw out the high and the low of the 9 a.m. candle. As you can see right here on the 15-minute, price closes above the high. What is our goal? Entry below the next candle's open, where at the midpoint of this candle. So what do? We use the fib and mark out the high and the low to find the midpoint. Next candle opens. We wick below the open into the previous candle's range, exactly the midpoint. Look for your entry. Long, targeting the key level, and then higher. Guys, keep it simple. Do not overcomplicate. This is literally it. Of course, this is the 15-minute. You would head on to the lower time frame to find your entry model. Let's take a look at another example. On the 1 hour time frame, you want to wait for 8 a.m. Draw the high and low of the 8 a.m. candle. Hopping onto the 15-minute, wait until the 9 a.m. candle forms. The close of the 9 a.m. candle is 9:15. So this means you must wait until 9:15 in order to draw out the 9 a.m. 15-minute candle high and low. Drawing out the range. Now we wait for the next candle to form. As you can see, this is an inside bar. We do nothing. We wait patiently. Next candle forms. What happens? We close above the 15-minute candle high. So the 15-minute CRT high. So the 9 a.m. CRT. And we closed above the 8 a.m. CRT, the 1 hour CRT. What does this mean? If you guys are paying attention, you would know that the close above is bullish. This means we must look for our entry below the next candle's open. Our next step would be to use the fib, measure the high and the low, find the EQ, the midpoint, then hop onto a lower time frame, wait for the next candles to open. Candle opens. We come down to the midpoint, entry at the order block. Long, targeting where the first standard deviation or a key level. If you hop on the 15-minute chart and look at this example after price has played out, you can see the 9 a.m. candle range was broken and the 8 a.m. candle range was broken with the same candle. Your entry would be below the EQ of this candle. Which candle? The candle that broke the range. Look for your entry. Turtle Soup. Entry long. Targeting where, as we saw before, the first standard deviation or a key level. Please, everyone, keep in mind you will be way better off only trading turtle soups. If you only focus your time on trading turtle soups of ranges, you will have a much higher success rate. As I mentioned before, turtle soups are much higher probability than breakouts. But breakouts do happen, as I mentioned before as well. I do not control what you do. You do what you want. With that being said, this is the final lesson of the 9 a.m. CR model. If there are more questions in the comments, please send me all your questions. And if there is more that I need to address, I will make a new part. However, for now, this finalizes the 9 a.m. CR model. Get to the charts, backtest and study everything that you have learned so far. Thank you for all the support and good luck trading.